Imagine waking up one morning and seeing oil prices spike 10% or renewable energy stocks tank, all because of a single headline. Trump and Putin are meeting. Sounds dramatic, right? But if you think the stock market moves only because of earnings reports or quarterly numbers, you're missing the bigger picture. Geopolitics drives markets, especially energy markets, more than most investors realize. Today, we're diving deep into how global summits, international relations, and even a single handshake between world leaders can move billions of dollars in oil, gas, and renewable energy stocks, and what you can do to protect your portfolio. First, let's answer the obvious question. Why should a Trump-Putin summit or any international meeting affect my investments? Here's the reality. Energy markets are global. Oil, natural gas, and even solar and wind industries are tied to supply chains, trade agreements, sanctions, and political stability. Take oil, for example. Russia is a major oil producer. Any hint of collaboration or conflict between the US and Russia can send oil prices soaring or plummeting within hours. Same with gas, especially in Europe, where shortages or sanctions can trigger massive price swings. Even renewable energy isn't immune. International relations affect subsidies, trade deals, and the global flow of components like solar panels or wind turbines. When governments negotiate or clash, investors react almost instantly. You might be thinking, okay, that sounds interesting, but I don't trade energy stocks. Why should I care? Here's the thing. Even if you're holding tech or consumer goods stocks, your portfolio is indirectly tied to energy prices. Higher oil and gas prices increase operating costs for almost every company, from manufacturing to airlines to shipping. That's why these geopolitical events matter for everyone, not just energy traders. Let's rewind to a few major geopolitical events and see the direct impact on energy markets. When the US met North Korea during the Trump-Kim summits, oil and gas markets reacted to every word about sanctions, tensions, or cooperation. Even rumors of easing sanctions caused small spikes in energy stocks. Traders were pricing in potential stability. The Russia-Ukraine conflict in 2022 is a textbook example. As negotiations, sanctions, or threats were announced, oil prices jumped dramatically, sometimes 5 to 10% in a single day. Gas prices in Europe surged as markets anticipated shortages. Renewable energy stocks were affected indirectly. Higher fossil fuel prices suddenly made solar and wind more attractive, triggering short-term surges. Even OPEC meetings can move markets, despite not grabbing headlines like Trump-Putin. Their decisions directly control oil supply, and a single announcement to cut production can trigger global oil prices to spike. Investors in both fossil fuels and alternative energy react instantly. Now let's imagine a hypothetical Trump-Putin summit. What could happen? If the summit signals potential energy collaboration, say easing sanctions or agreeing to increase oil exports, oil and gas stocks could soar in anticipation of higher supply. Renewable energy might react negatively in the short term, as cheaper fossil fuels temporarily reduce demand for alternatives. If talks break down or rhetoric turns hostile, markets expect higher risk of supply disruptions. Oil and gas prices spike. Shipping and logistics companies face higher costs. Renewable energy becomes more attractive as a hedge against volatile fossil fuel prices. Even uncertainty can move markets. Traders hate unknowns. You could see wild swings in oil, gas, and renewables as investors react to every rumor or vague statement. Here's a tip. Markets often move before the actual event. Traders anticipate what leaders might say. That's why monitoring news, official statements, and even social media leaks is crucial. So if you want to survive or profit during these geopolitical moments, staying ahead of the headlines is non-negotiable. All right, let's make this practical. Here are strategies to navigate geopolitical shocks in energy markets. First, diversify your portfolio. Don't put all your eggs in energy stocks. Include bonds, tech, and international equities. Diversification reduces risk when a single summit or headline moves the markets. Next, monitor geopolitical news closely. Follow credible news sources and think tanks. Summits, sanctions, or trade talks can trigger overnight movements. Awareness allows you to make quick, informed decisions. Quick reminder, if you're finding this breakdown useful, subscribe and turn on notifications. That way you won't miss the next big summit or market shock that could impact your portfolio overnight. Use hedging tools like options, futures, and ETFs focused on energy or volatility. To protect your portfolio, for example, if you hold energy stocks, buying puts can offset losses during sudden drops. Identify market winners. Not all sectors react the same. During geopolitical crises, alternative energy often benefits when fossil fuels become riskier. Logistics and defense sectors can move independently of traditional energy markets. Finally, stay calm and avoid emotional decisions. Geopolitical events create headlines that can trigger panic. Don't sell on fear. Evaluate actual market exposure and act rationally. The market often overreacts, then corrects. Let's get specific. How exactly do these summit dynamics affect oil, gas, and renewable stocks? Oil. Prices react instantly to supply risk or policy changes. Russia, Saudi Arabia, and U.S. production all come into play. A statement from Putin or Trump can cause multi-percent swings in a single trading session. Gas. Europe and Asia are highly sensitive. Even minor disruptions and pipeline agreements or sanctions can spike prices dramatically. Renewables. Often the inverse of fossil fuels. When oil and gas get expensive or uncertain, investors pivot to solar, wind, and battery technologies. Subsidies, trade deals, and tariffs on components can also move these stocks. Here's a question for you. If oil prices spike tomorrow because of a Trump-Putin headline, would you A. Buy fossil fuel stocks hoping for short-term gains, B. Move into renewable energy as a safer hedge, C. Stay in cash and wait for the volatility to settle? Drop your answer in the comments. I'll respond and share which strategies worked in past summit reactions. Key takeaways. Geopolitics drives energy markets, sometimes faster than earnings reports. Oil, gas, and renewable stocks react differently depending on the scenario. Anticipation matters. Markets often move before the summit. Diversification, hedging, and monitoring are crucial. Emotional discipline separates successful investors from the rest. If you haven't subscribed yet, now's the perfect time. Join our community of smart investors who actually understand how geopolitics moves energy markets. Hit that button and stay ahead of the next big market shakeup. The next time you see headlines about a Trump-Putin summit, an OPEC meeting, or any global geopolitical tension, don't panic. Instead, analyze the likely market impact, understand which sectors will move, and make informed decisions. Markets move billions on perception as much as reality. Being prepared, rational, and informed is how you turn uncertainty into opportunity. Thanks for watching. Stay sharp, stay informed, and I'll see you in the next video.